Good evening, Waleed. This is Ryan with TrendLizard.com. Thanks for being a member at TrendLizard, and thanks for sending me the email with the three tickers requesting analysis. We're going to take a look at SOX, the Semiconductors Index. We're going to take a look at GDX, the gold miners ETF, and then WCLD, which is a cloud computing ETF. Down the line, we'll take a look at them all in this video, starting with SOX, the Semiconductor Index. This is it. I think I might have looked at this for you before. If not you, it was somebody else. It was incepted back in 1994, chopped up to a high in 2000, and then gave us a very large counter trend, a three-wave pullback, and that's when things have become very interesting for SOX. Looking forward, obviously, it's kicked off into a huge uptrend off that 2009 low. From below 200 up to 2433 at the close today, a very large advance. It's pretty clear from this time frame when you look at it that SOX is still in that advance off the late 2008 low. Most things put in a low in 2009. But the NASDAQ and some other things did it in 2008, so it was in 2008. What it does look like is one large five-wave advance. That's obviously a bullish thing because it's trendy, but when you look at the fact that it appears to be in the fifth wave of that advance, it certainly has to put us on guard to think that at some point this thing could end and we could see a much larger pullback, bigger than anything we saw since the 2008 low. That's kind of the long-term time frame, bullish, but you got to be careful because it looks like it could be getting closer to an end to this big up leg off the 2008 low. So let's go ahead and zoom in just on this five-wave advance here. This is a look at it here. It all plays out very nicely. You can see every trendy up leg. Wave 1 took on a five-wave move. Wave 2 was a three-wave pullback. Wave 3 was a nice five-wave move as we expected. And then that big 2020 decline that everything on the planet went through, and now it has kicked off to the upside again. Pretty much everything about this is beautiful. Really the only questionable move through the whole thing is what happened in 2019. Not a super clear five-wave move to the upside. Would have preferred that it would be a five-wave move since most things are. Nevertheless, I believe that this is the correct labeling just based on how far above this high in 2018 that this early 2020 high was. I believe it was the fifth wave of this third wave advance. Let's continue diving in here. This takes a little bit closer look at that funky move. As I said, it looks more like a three-wave move, but we can get away with labeling it as a five-wave move. Regardless, this is how we have to label it just based on what's happened since then. Got a very sharp three-wave pullback in 2020, which appears again to be that fourth wave of the entire advance off the 2009 low. So really, the only thing we need to care about is the advance off the 2020 low. It's been a big move, obviously. It's been big everywhere. It's about doubled its value here on SOX. And the question we have to ask is, where are we in this progression? Are we getting closer to a high? So let's go ahead and zoom in and just look at the 2020 action here. So this is it. This is the advance off March's low. As you can see, just kind of like the overall pattern off the 2009 low, we see the potential that this thing is getting closer to a high, closer to a completed five-wave move. It counts out, there's probably different ways you can label such a direct move, but at the end of the day, you get a larger pullback towards the beginning in March, and then we have a larger pullback in September and October. These appear to kind of be the book-ending corrections within a larger five-wave advance to me. And now it's taken off of September's low, like so many other things have done to the upside, and is setting new highs here. Bottom line, this looks like it could be a five-wave advance that is getting closer to a high. And again, if we zoom out, we can see that it could be nearing an end to the entire advance off the 2009 low. Not to scare you, but it's something that we need to be aware of. Bottom line, right now, you need to be bullish. You can't live in fear that things are going to end. We just need to be aware that if cracks start showing up, we need to take it seriously. And in terms of the 2020 advance, that boils down to the price level 22.25. If the SOX moves below that level at any point in time, I wouldn't want anything to do with this guy. It would look like this five-wave advance is completed, and again, that could suggest that maybe a much larger advance or high is in for a decade-long plus advance to the upside. So you'd have to be careful. If 22.25 is ever breached, that is my indication it is time to no longer be in this guy. Doesn't mean it's going to break anytime soon. We could see this guy extend to the upside. It could head much higher, but if it starts breaking down or shows any weakness, we're just at a point in the pattern that I would be concerned about it. Let's go ahead and zoom in and just look at the advance off of September's low. This is it. I absolutely hate the way this fourth wave pullback completed here. You get this nice down leg, sideways action, should have got another down leg. This happened on a number of places. Absolutely whipsaw, just total trap type move right here. Just ugly. Never expect this to happen. Never see it coming, but it did. It looks like it ended here, judging by what's happened to the upside. That is, the September's pullback ended here. And then you have this very strong leg to the upside from there. It does not look like this up leg that's taken place off of September's low is over. I think it's going to head higher before it's done. When we zoom in closer, we can see that that level can actually rise up to about 2,300 that you need to be watching. I think I had it at 22.25 here. But if we get onto the shorter term time frames, we can actually use a shorter term price level, which can move up to 2,300. So bottom line, I would be bullish on SOX. If you see any cracks in the dam, if you see price move below 2,300, I would take it as a warning sign. I would no longer be involved here. I would get out if you have positions. So there's SOX. Let's go ahead and move on to GDX, the gold miners ETF. So this is it. This is another one that I've covered before. Not sure if it was for you or for somebody else. Nevertheless, it was incepted back in 2006. Had a lot of back and forth movement, which I've labeled as an ABC pullback, which is the only way I can find to label it. Off the 2015 low, it's given us a 1 or A, 2 or B, and then a 3 or C to the upside. The overall move off of this low so far is a 3-wave move, and it has found a resistance level, at least initially, at a 61.8% retracement of this down leg from 2012 to 2015. So this is major resistance. It's interesting that it stalled there. Little spoiler alert, I don't think it's going to stay there. I think it's going to continue higher. But as is, we have an advance that is 3 waves off of that low that recorded back in 2015, and there is resistance that has been found here. So let's go ahead and zoom in on GDX. This takes a little closer look at that advance off of the 2016 low. Again, you have a 1 or an A, a 2 or a B, and then you have a 3 or a C to the upside here off of the 2020 low. That's what we're looking at. Once again, all that matters, it all boils down to what's happening in 2020. What is going on here? What is the buying opportunity? Where is it in the progression? Let's answer those questions by zooming in on that 2020 price action. Here it is. What it looks like has happened to me is off of March's low, you have a nice 1, 2, 3, 4, 5-wave advance. And then we have this prolonged, slow, but still prolonged pullback off of August high. Now, we had this kind of choppy action back in April and May and in the early parts of June, but this is the largest pullback we've seen since March's low was recorded on this guy. It fits as a larger degree pullback. It also makes sense because we have a 5-wave advance here. This looks like a larger degree pullback. So far, this looks like a counter trend move. It's been slow. It's counted out as a 3-wave move so far. And I think it's going to give way to substantially higher prices. I think we can expect another large 5-wave advance over time, just based on the way this is played out, based on this the counter trend look of this price action here. So here's what it boils down to. If it can move above 42, that's going to solidify the counter trend nature of this pullback off of August high. It looks like a 3-wave move, but if it moves above 42, even better. That's going to be a bullish indication. On the other side of it, 38. This is the most important level on the chart. If GDX moves below 38, that's going to indicate that whatever this pullback is, it's not over. It's going to head lower. And if it's heading lower, that means it opens up the door for a move down into this yellow support area. And that would be a much larger pullback, obviously. So if you own GDX, I would not be involved if it moves below 38 unless you're willing to sit through a pullback that could head all the way down to 27.50 without doing anything wrong. Personally, that's too much for me. I wouldn't sit through a move like that. If it moves above 42, I'd be bullish, but I'd use the stop level at 38 because a move below there would tell you that there's a larger counter trend pullback. If it moves below 38, that's okay. Just don't own it. Just wait for it to complete. This counter trend pullback could take some time. If that's the case, look for it to find support in this yellow area. And then when you see some strength emerging from that yellow area, that's going to be your buying opportunity. So that's what we're seeing on GDX. Let's go ahead and move on to WCLD, the cloud computing ETF that I've never looked at before. But here it is. And there's not a lot to look at, to be honest. It's been around for about a year. It was incepted in September of last year. little up move, a little down move, and then it obviously, like everything else, the real interesting part started in March. Now, there's two ways to label this move to the upside, and it's hard to tell just based on recent action off of September's high. Here's one way to label it as a 1, 2, 3, 4, 5 that completed in early September, and then a pullback has begun from there. If this is the case, we would expect a larger pullback to emerge off this high that happened in September. Basically, we'd expect this to be wave A, this to be wave B, and then to see it break down and give us a C wave likely into this yellow support area before price turns higher. A move below 42.75 at any point says that's what's coming. It would indicate that you're getting a larger pullback, and that would be, for me, a reason to not own it, just because, again, it opens up the door to a pullback potentially as low as 30. I wouldn't be interested in watching my value go that low. I'd rather be out and look for a better buying opportunity. So 42.75, clearly an important level. Here's the other way you could label the advance off the 2020 low. Basically, a first, a second wave, a third, and then a longer, kind of funky fourth wave, and now in wave 5 to the upside. If price continues higher directly from here, this is going to be the best fit. This is the only thing that would make sense if price heads higher from here. What did not happen is a 5 wave completed, and then this little weak pullback here corrected it, and we're ready to take off to the upside. That's not the case. If price heads higher again, it's going to fit as a 5th wave, but then that would be the terminal ending move to this advance off of March's low. So that would be kind of a completing move, and then you would look for the larger pullback, something to correct this up leg. Again, 42.75 is the key. A move below there says that we're getting a larger pullback off of September's high. If it stays above that area and continues higher, this is going to fit as a 5th wave advance. Once that's complete, you're going to get that larger pullback. So I'm not sure about the buying opportunity. If you own it right now, I would own it against 42.75. If it moves below that level, I would get out of it. If it doesn't, I would continue to own it with the potential for a larger 5th wave advance to the upside. Final thing, let's go ahead and zoom in on this recent action off of September's low. Again, this is another one of those really funky, annoying pullbacks where you get a sharp down leg, counter trend price action, and then it just ends. This really never happens, only in 2020. I mean, 2020 gets funkier all the time, but this is terrible price action. It kills me as an Elliottician to see this type of thing. But apparently that's what happened. Off of the low in September, it looks like a developing 5-wave advance that has more room to go. It looks like it's in the 3rd wave of that advance right now. Based on this, I would think higher prices are likely. But again, it boils down to 42.75. If it reverses around this area and moves below there, you're going to want to be out because that's going to indicate a larger pullback that could head quite a bit lower. So use that as the key. As long as it's above that level, you can be bullish on this guy and continue to own it with the potential that this is a 5th wave advance, and then look for a completed 5-wave move to the upside before you're ready to be done with this trade on WCLD. So I hope that's helpful, Waleed. Again, we really appreciate you being a member at TrendLizard.com. We do this stuff every day, as you know, and come visit us if you haven't already, and we'll show you how to do this stuff every day, looking at all major corners of the market. So have a great night, and we'll talk to you soon. Take